Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Tuesday, May the 27th. The year is 2025. Let's talk trading. Do not be normal. These videos are for educational purposes only. Your results may differ from mine. And as always, have your risk management in place because you don't want to lose any more on any one single trade or single session than you are willing to lose. So, what do I mean don't be normal? Well, the majority of people who start out in the trading game lose, right? And there's certain things that we as humans can't help but do. And actually, earlier today, a few hours ago, I was talking with Walmart, and I told him, I said, we should have had this conversation on a video, but he had to leave, and we're going to probably do it tomorrow. But we were talking about fear and survival. You see, we have a survival instinct in us. It's hardwired. And if something happened that was dangerous or life threatening, um, the next time we encounter something similar, we run away from it. We back away from it, or we try to extinguish it. And that's because we're human. That's because we're normal. And in trading, that's what hurts us a lot of times because if you tried a method and you lost money, your instinct is to say that method isn't any good and you want to move away from it. And it's funny, I had this email that I just read today. I think I got it a couple of days ago, but been busy. And it was from one of those, I forget which one was, one of the stock guys. And he was saying about, not being normal. Kind of prompted the idea. And the thing is that he also said it's something that we said, we our normal reaction is, oh, this system's no good. That Rumpled One, his systems, they're no good. His methods, his buy zone, his wick zone, his rat zone, and his fade, the pivot, and all that stuff is just no good. Whole horizontal line, that's all a bunch of hogwash. It's just no good because I tried it and it didn't work. Well, that's the looking outside yourself for the reason that you failed rather than looking in the mirror and going, what didn't I do right? What did I do wrong? What do I need to do to learn how to be successful? And so, as Tony Robbins says, ask a better question, you get a better answer. So rather than focus on what's wrong on the outside, you ask, what can I do to make things better? And so, but that's not normal. And so that's why I'm saying don't be normal. Because if you do and you're struggling, chances are you're going to keep struggling. You have to get outside of yourself. And it's kind of funny because you've probably heard me refer to myself as, Mr. Inflection Zone a few times. And I'm always looking at things to say, hey, what can I do to improve my chances? And I write a lot of indicators like this screen here is for the price action score idea I had. Well, I've had a new idea. In fact, let me bring it up. I'm going to pause the video for a couple seconds. Okay, so I had this idea about, you know, how do I reduce the chance that I get inflected? Meaning, I enter a trade and it goes against me, and it might take an hour or more before I ever get it, if I ever get a chance to exit with the profit. And so, you guys know how I like to tease about the squiggly line people, but I did a lot of work in squiggly lines, and even before I came along, there was a study about the different moving averages, and they said the EMA 5 was the best. So that's what I based my indicator 2 on. And so what I was thinking was, probably a year or so ago, maybe two or more, I was looking at the distance when price gets away from the EMA and has to come back. And I was basing some trades on that. They were working, because one of the big things I found out that most of my drawdown came when I traded against the M30 candle collar. And it's just a matter of time just to wait. So you can see here we've got M1, but we put M30 up. You can see here that it's telling me, since it's above the open by, oh, I don't have it here, but it's above the open by about 2 pips right now, I should look for longs. But as you can see here, we're almost near the end of the 30-minute candle, and it's dropping back. That was one thing, but then it's like, you see this setup here, a flip-flop box. Sometimes you take it and it goes your way. Sometimes you take a flip-flop and then it goes against you. And is there some way to filter out? And long story short, when I started to look at the chart, because on my phone, all I have are candles, and I have the EMA 5, because my phone doesn't do any, can't put my indicators on it. So when I'm not in front of the computer and I'm just happen to be looking at the phone, looking at price, that's all I get to look at. Well, I noticed something. When the EMA starts to bend over at the top, that's when you can take a short. And so what this indicator is showing is the difference between the EMA right now and then the EMA 1 bar ago. And so if it's a green positive number, that means the EMA is going up. But if it's a red negative number, it means the EMA is going down. And so I was looking at that, and then I actually put something, a live, what I call dynamic indicator on here, where every ticket would scroll and tell you what the difference was, but that didn't really show me anything. So then I tried a histogram. I said, hey, maybe if I do a histogram. And what I saw was, you can take a look here, and if the difference between the EMA, the current and the previous, is like 1 or more, a lot of times price will start to go down, but not always. So you can see here what's happening. And you might be tempted to take that short, but you see here, this isn't a trigger. This is more of a heads up. And so here, this would have been a flip-flop box. This candle right here, and then this would have been a trigger. Well, you can see here it made a high. The distance between the two EMAs was peaking. Then all of a sudden it was less, less, less. And so here, you see it was less. Then it's just like, can I take that trade here? Right here? So I look at it and I go, well, it's close. You could give it a shot. And then all of a sudden it's this, and then boom, you drop and you pick up a couple of pips there. And that's what I came up with to avoid getting inflected. So, like right now, we've got about 2 minutes before this candle closes, and it's almost like probably not the best time to get in the trade. But you can see here, it's crossed the line from red to green, so that means the EMA turned up right here. When that candle closed, it turned up. And then here, you got a little bit higher away from the EMA, and then all of a sudden it moved up. So you may have been able to pick up a pip, almost a pip, if you wanted to take that trade. But I'm using it as a filter. So is that normal? It's like, no, I don't think anybody does anything like that. So I am looking here to basically tell me, yeah, this is probably a good time. No, this isn't a good time to take a short. So, for example, right here, that would have been a flip-flop box looking to the south, but it hadn't hit this 0.5 level down here. And that's when I notice most of the time you can get a short if you get the trigger. So right here, you see it hit the 0.5, then you got a bear candle, would have been a flip-flop box. And so if you take that, you would have been rewarded by, oh, maybe a pip or two. And then if you wrote it out, but the question is, once again, was I trading with or with the M30 or against it? And so that's one of the things that I look for. So now we've got a new M30 candle happening. Switch back to M30 right there. And so let's just take another look here. So it looks like price might want to come back up to somewhere around this area. And you just had a flip-flop box on a brand new M30. And the other thing is, you look at H4, the open was at 0.75, and so H4 is green. So that's also, an H4 needs the range. So as long as it stays above the open, you're okay. So that open was way down here at the 7 level. So we can see what might happen. And so you just sit and you wait. But that's the kind of thing, oh wow. Looks like I've got to do something in that indicator. This work. It's a let's try it something. Wow, they're all triggering. Let me take a quick look at something here. Oh, 05. So anyway, that's what I'm working on for now. So fellow traders, think about what you're doing that's normal. Check and see if you've got that survival instinct kicking in, and that's making you hesitate when you enter because you don't want to lose. Because see, losing, that's a survival thing too. And so you're just going to have to override it, because that hesitation might cost you a half a pip, and that might be the difference between taking a profit or being stuck in a trade. Because It's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.